Thanks.
Hello, everyone, and welcome to our program titled All Things Energy for PAA Members. My name is Carrie Shepard, Marketing Analytics Manager for APPI Energy, and I'll be your moderator for today's webinar. Please note that all participant lines are muted. Please submit questions anytime during this session by using the Q&A box on the bottom of your screen. Our presenter today is Drew Pangborn, Senior Energy Consultant with APPI Energy. Joining us as well this morning is Allison Mitchell with PAA. Welcome, Allison. Let's get started.
Good morning. I wanted to take a few minutes to introduce our presenter today, Drew Pangborn. APPI has been PAA's preferred consultant or energy consultant since 2008 to help members like you save money and create budget certainty for your business. Yes, they provide electricity and natural gas procurement, but this year they are rolling out the Energy Solutions Division for energy or efficient projects and improved sustainability. I hope you all enjoy the program and look forward to any of your feedback on the program and what APPI can offer you. Thank you.
Great. Thanks, Allison. Thank you, Carrie. And thanks, everyone, for taking a couple of minutes this morning to log on and hear a little bit more about APPI, our relationship with PAA, and more importantly, just a very high-level description and understanding of energy deregulation, and more importantly, how we're here to assist and give you an unbiased opinion on helping to reduce costs going forward in conjunction with the association. So with that, we'll get started, and I will tell you I will do my best to keep the words and this presentation to a brief minimum, and of course can answer or address any specific questions as they arise, whether after the presentation or certainly in follow-up correspondence. Just to give you all a little bit of background on myself personally, I've been with APPI since 2008, so a little over a decade now of working exclusively with members, or customers, I should say, helping to reduce, manage, and navigate the maze of electricity and natural gas deregulation all across the country. More importantly, I've had a particular focus over the last 11, now going on about 12 years now, working exclusively with dealers all throughout the country in the certain markets or the deregulated markets which are allowed to do these various purchasing strategies and activities. Got my start personally in Texas working with Texas auto dealers, but here really in the past 6, 7, 8 years now, not exclusively worked with PAA dealers. There's many other senior analysts on our team that do have relationships with dealers across the state, but I've managed a large bulk of the relationship that APPI has now with PAA, and it's been really a blessing ever since we started doing it. We truly enjoy working with dealers across the state and helping them manage these various purchasing strategies. Also, just to at least highlight, there's a lot of people that can be doing these various sort of purchasing activities or assisting in the process. Almost everybody at APPI, including myself, has several endorsements or certifications from the governing board or body, the Association of Energy Engineers, Energy Management Professional, as well as the certification, or CEP, Certified Energy Procurement Professional. I do hold those accreditations to my name. Today, again, we'll keep it very brief and light, but I wanted to take a few minutes and, again, give a very high-level background on the industry today and really how it translates to your organization and your stores. The procurement process, what we here at APPI are more than willing to help you out with, but also the Energy Solutions Division, as Allison had touched on a little bit earlier. There's many ways that we can look at reducing electricity or natural gas costs. For many, many years, we've always focused on the power purchase agreements, which you'll hear more about here in a minute, but also the demand side of things too. The whole idea of reducing demand throughout various efficiency upgrades or sustainability upgrades. We're very much involved with dealers now on that front too, and again, we'll talk about that here in the next couple of minutes. Very high level, just so everybody has a quick understanding of, well, where does my power come from? And how are you able to get it at a competitive price, let's say, outside of my local company, my local utility company, and really how does this translate or navigate down the avenue or down the pike and get to your facility day in and day out? It starts with the competitive generation or the supply portion. However that's being generated, whether it's a fossil fuel mix, hydro, renewable, that can be generated all throughout the country at various sites. It doesn't have to be within the state of Pennsylvania or within the tri-state area, let's say. Generators are procuring or purchasing default generation, not at competitive times, but when they have to sell back to you as a default end user. Once that generation is in the mix, it's transmitted through the independent service operating systems, or the ISOs, all across the country. So basically, when you're driving down the road and you see power lines and transmission grid systems, your power from the generation site is being transmitted through those lines, and then ultimately to your LDC, or your local distribution company. If you're in Philly, that's PECO. If you're in Harrisburg, that's PPL. If you're out west in Pittsburgh, it's West Penn Power, Duquesne Light. Up in Erie, it would probably be Penelec. But again, that's just to give you an idea of these local distributing companies. The power is sent to the distributor, and then ultimately then onto you and your dealership, or the end destination, through the local transmission lines that we had just spoke about earlier. The one thing to at least decipher here, some of you might be asking, well, when I get this bill for even numbers, let's say it's a $1,000 a month bill, how much of it is supply? How much of it is distribution? Those are the two main cost components of the electricity bill. And for easy numbers, for easy percentages, on average, supply is about 65 to 75% of your overall bill or monthly charges. The distribution side of things is that 25 and maybe 35% of the total cost each month. Those distribution or delivery costs they're regulated. They cannot be adjusted. That's why you're still paying MedEd, West Penn Power, PECO, whomever, to make sure that the reliability factor is there, that every time you go to turn the switch on every morning, you have power. If a storm comes through, a severe storm, and it knocks out power one night, these costs associated with delivery or distribution charges go directly to your local utility to help restore power in these situations. So the reliability factor is what that small portion goes to each month. It's the supply cost where, through the act of deregulation, most suppliers are forced to sell off their generation assets. In other words, they're not making a profit off of you any longer on the supply side. That's why you see this price to compare or default tariff, let's say, with your local utility that's constantly being adjusted. It's different with every utility. Some utilities change it every 3 months, some every quarter, some every 9 months, some every 12 months. So it all depends on where specifically you're located, but that's just to kind of give you an underlying background or basis as to why the price is constantly changing with the local utility. And again, this is where we come in, or another consultant or supplier would help you better navigate that maze, and ideally, help you compete against that. Perhaps lock in at a more opportune price and better opportune timing surrounding that decision. But again, at the end of the day, through the act of deregulation, forcing to split up those particular cost components of your bill, that's how we have a better understanding now of where those costs are going each and every month, and really the overall advantage or benefit that you'd have by looking at a supplier solution going forward, a competitive supplier solution. It's not just as easy as, going with whatever a supplier or a consultant would tell you. Now's a good time to buy. APPI, of course, we like to give you a little bit more of an illustration or some analytics surrounding these very important purchasing decisions that you all are faced with. We'll dig into it a little bit here in the next slide, but I wanted to show several of these illustrations here, because this is what a lot of your power purchasing is based upon. It kind of stems off of what I had mentioned just a few minutes ago, the utility not being designed or not in this game, for lack of a better term, to be competitive with their default supply prices. This top chart here shows PJM wholesale market settlements. PJM quickly stands for, it's the grid system that we all operate on, the Pennsylvania, Jersey, Maryland grid system. This is roughly about a 10-year historical look back of day-ahead electricity prices behind PJM. As you can see here, note the volatility. That's the one thing that I want to stress here, is that if you or your local utility, say MedEd or Penelec or whomever, is buying when they have to, meaning on the 15th of the month or whenever that particular date is, they are not in this business, this game anymore to be competitive with their overall default supply price. If the market's down when they have to go and procure the energy, then you may see that benefit in the coming months through your default tariff. If they're not buying at an opportune time when the market is positioned favorably, like some of the spikes that you see here in 13 going into 14 as well as 14 into 15, even 17 and 18, there was a spike throughout the winter. If they're not purchasing at opportune times, then you'll see that reflected in your overall price to compare. We get competitive, APPI, direct suppliers, consultants, whomever. That's our job day in and day out, is to monitor these markets and help assist with these various purchasing decisions, identify when good buying opportunities actually exist. I wanted to, again, also share just down below a historical natural gas chart. What we found, of course, over the years is that the sheer amount of natural gas that's involved in the generation mix for electricity, this is the easiest day-to-day indicator that we can find, any analyst can find, to help better predict what how electricity is going to trend the next day. So by looking at natural gas on a day-to-day basis, that's how we're able to determine or have a good sense of where electricity prices might go the day after. And what we found, as you can more or less see here in these two charts, if you were to overlap them on one another, they typically trend in lockstep with one another. If gas is up one day, you're going to see electricity prices jump up the following day. So again, just a couple of more tools that go along with this overall equation of helping you better navigate this maze. Stemming from that, again, it's not just as simple as looking at going and seeing a 10-year historical look back or illustration of gas prices and basing a decision off of that. We like to get even more specific with some of the various solutions and opportunities and analytic charts that we want to provide to you, honing down to your specific start date as well as the specific utility in which you're a part of. And I want to backtrack just for a quick second and mention here, this is in conjunction with our sister company in-house. It's the Energy Research Council. In short, what the ERC is here to do is to accompany APPI in our decision-making process and analysis for our customers to help them better determine two things: when to buy and perhaps how long to buy. So again, this goes along with the proposal, completely proprietary and exclusive to APPI, but we'd love to share more specific information with you and how this translates into your next purchasing strategy. But just to give you a couple of examples here, the one up top, the chart up top, is showing average benchmark retail electricity pricing over a 24-month period, 24-month current trend for customers behind West Penn Power. So essentially what that means is that we've been tracking, monitoring, and gathering analytic data here over the last roughly 2 years specific to West Penn Power over their 1, 2, and 3-year calendar strips for customers. This is how, once you actually depict the bullet points, we're able to see trends in electricity pricing specific to West Penn Power customers. So what is this chart showing us? If we were looking at a buying opportunity, if you're a customer that's looking to perhaps leave West Penn Power and look at a competitive solution, now is probably a good time to be doing it. Looking back when we started this in May of 2017, we can clearly see that prices are about 15 to 20% lower than what they were at that point. So again, identifying a favorable buying opportunity for you. The chart below actually shows the percentage change over time for West Penn Power customers with a specific start date of September of 2019. Again, this can be adjusted to whatever your upcoming expiration is or however you'd like it to read. If your contract doesn't expire until January of 21, we can absolutely tweak this chart to illustrate that particular trend for that upcoming new start date. It doesn't have to be behind West Penn Power. It can be behind NetEd, PECO, PPL, fill in the blank. But again, what this chart shows is certainly volatility associated with it too. At first prices dipped, then we had a spike throughout the winter, as you can see, and now we're also faced with a favorable buying opportunity again for that, well, in but in the past start date of September 19, but as you can see here, it's depicting or illustrating a favorable buying opportunity. Prices are as low as they've been since we started tracking this in March of 2018 for this particular September start date. One more additional chart to share with you in conjunction with the ERC as well. We're here through PAA to give you an unbiased opinion on your energy and gas purchasing strategies. It's as simple as that. When I mean unbiased, I mean that if it makes sense for you to remain with the utility and not look at an alternative competitive supplier solution, we would very well suggest that. In addition to, if there's another competing offer that's more compelling or more beneficial to you, at the end of the day, then we would recommend that you go that route too. Only reason why I want to mention that is, again, through our affiliation with PAA, we want to outline any and all possibilities for you when it comes to this well, hectic and important purchasing decision. One is, of course, asking what my current utility is charging. What sort of savings opportunities, in addition to the budgeting, of course, what sort of savings opportunities would I see by leaving the utility and going with a competitive supplier option? We track this. We've been tracking it since day one, noticing, of course, the ebbs and flows in each specific utility's default price to compare and updating that as it changes throughout the year. What you'll see here on this particular chart is a comparison for Met-Ed customers, but their default price to compare dating back to 2014, and as well as some price to compare averages, which you can see by the dotted line there, but more importantly, the benchmark averages and the actual price discovery that we're seeing for customers behind Met-Ed dating back to 2014. Essentially what this trend chart is showing you, overlaying on top of the bar graph here, is that more likely than not, there's always an instance or two where we might not be able to show you a benefit over the utilities price to compare, but more likely than not, there's a significant benefit by taking a look at competitive supplier solutions. More than likely, there's going to be a savings opportunity or a cost reduction opportunity associated with this upcoming purchasing decision. So, of course, we can analyze it from many different angles, but just wanted to share with you a quick few examples. It's not just as easy as looking at a number, and if you're going from 8 cents down to 6 cents, that's a win-win. Sounds good, but let's dive into it. We like to dive into it a little bit deeper than that and show you some additional illustrations and analysis for this upcoming purchasing decision. If you were interested in having APPI take a look, it's pretty seamless and doesn't take much effort on your end. What we're here to do at the end of the day is provide you with a customized analysis specific to your accounts, as I mentioned, your load zone, everything customized and unique to your facility and stored at the end of the day. We're not aggregating anything together if it's outside of the organization. We want to keep things customized and specific to your accounts and your usage, your profile, and your specific needs. Once we gather the utility billing data, just a recent statement and a non-binding authorization form, we can go out and capture the historical data, interval data from your local distribution company, PPL, Met-Ed, PECO, whomever. From there, we go ahead with a formalized RFP request and submit the information to not every supplier under the sun, but only the top tier suppliers that APPI works with. This is a big differentiator that is better time than ever to at least mention it. We are positioned with PAA and also work independently on their behalf and work with these various top tier electricity and gas suppliers. Not every single supplier out there works with APPI, although they may have called us or knocked on the door to get on their bid list, as they like to call it. We only work with the approved and rigorously vetted suppliers by our in-house corporate counsel and VP, Mike Payne. The reason why I say that is because some of you may have even had some negative interactions or experiences over the last decade or so with fly-by-night supplier operations. We, of course, value the PAA's endorsement and relationship over this year, so at the end of the day, we only want to partner with the top tier and most reputable suppliers that we know will be satisfactory as far as what their deliverables are going forward. No changes to the price. These suppliers are in this game to stay there throughout the duration of the contract. Again, just something to keep in mind here. There's not many barriers to entry, let's say, for a consultant to get a license and jump into this industry. So please be wary when fielding these calls and taking a look at what your solutions are. Of course, we're here to help and, as I mentioned, give you an unbiased opinion through PAA, but working with those 36 closely vetted suppliers is what's going to make the most sense for you at the end of the day, knowing that you have strong financial backing with these suppliers, as well as PAA and APPI standing behind the supplier that you're placed with. Another great point, too, since this is a free, PAA member benefit, this is available to you as a dealer at no cost or obligation. If you want to take a look, see what the market can bear, and you're not happy with it, that's fine. You're free to walk away at that point, and we can re-examine it at a more opportune time. But again, just wanted to make the point that if you're interested in taking a look, no harm, no foul with this sort of approach. Once we do get the numbers, as I said, we'll analyze it in a variety of different ways for you, come back with some sort of a formal recommendation, but you are not obligated to proceed with that by any means. We're here to, at the end of the day, we want you to be comfortable with these purchasing decisions. So however we can do that, that's what we're here to assist and help out through with PAA's help. Also, just talking about the contract negotiations, that's where we also step up to the plate too and help drive down supplier margins even more. One thing to also point out here too, if you have looked at this before and you've utilized a direct supplier solution, that's great, that's fine. What we found over the years is every time we're sending, APPI is sending an RFP out to our various members of the supplier community, they know up front that their margins need to be aggressive and reduced to some degree if they want to even compete for this business. So what I'm saying here, what APPI is saying here, is that by utilizing a consultant, especially one that's endorsed by PAA, it's almost a guarantee up front that you're getting the most aggressive and most competitive price discovery options out there. If you can think about it in the supplier's shoes, when they receive an RFP from you, just directly from you, they're going to give you a price. Is that price good? Is it bad? Who knows? When they receive an RFP, a competitive RFP from APPI, they know that this is also being rigorously vetted and sent out to, as I've mentioned, 35 plus suppliers. So they know up front that if they even want to take the time to bid on this your opportunity, they need to roll their sleeves up and get incredibly aggressive with their price discovery that they present back to us. So just keep that in mind going forward. The price discovery that we would provide to you is aggressive, to say the least, first and foremost, and not to say that we can't go back and negotiate even further with the suppliers to get exactly what you, the customer, would like to see on the bill going forward. I've spoken about it enough, but finally here is a sample proposal. That, again, at the end of the day, if you were looking to have APPI or another consulting outfit provide you with some solutions, this is what you'd see. Some variations, of course, if it's through another outfit, but if it's in-house at APPI, at the end of the day, this is exactly what you'd see from us. A very simple to read and understand proposal, although there's a lot of different supplier solutions on here. We want to make sure that every advisable solution is illustrated here. And you're probably thinking, I don't see 35, 36 suppliers, Drew. That's because even though we get offers from all those various top-tier suppliers, we only want to focus on the suppliers that are most attractive, most aggressive. And again, as you can see here, most of these numbers are compelling and are rather close to one another in their various term offerings. It's just hundred thousandths of a cent per kilowatt hour is the cost difference amongst these competitive suppliers. Again, you'll see down here at the bottom too, account numbers, rate class, load zone, utility, everything will be stated on here just so we can confirm that all accounts that need to be included are in fact included in this price discovery request. Something else to note here too is the note section on the side. We strongly advise, of course, that suppliers provide us with fixed all-inclusive price discovery unless you'd like to look at another alternative from that. We can always look at a 9x plus basis option or a block and index solution. Perhaps a layering approach might be of interest to you. But what we found over the years is that fixed all-inclusive solutions work the best for dealers. They're directly comparable to, again, that utility price to compare that is set for various utility zones across the state. It's directly comparable to that. It's a fixed all-inclusive price. It's locked in for that for the duration of the particular term that you might be interested in proceeding with. The notes section, though, talks about just some supplier differences. There might be a slight difference from one supplier to the next, even though they're offering more or less the same product. Just one or two things to go over here. If we can look at, say, the notes section for APG&E as well as Constellation, you can see that both provide single, but Constellation can provide a dual billing format. What single billing means is that essentially your supply charges are inputted onto your your distribution billing statement. So if you're in Harrisburg with PPL and you opt for a supplier with a single billing preference platform, that supplier's charges each month would be inputted onto your PP&L statement. You'd still write one check a month to PPL. They would remit payment to the competitive supplier that's on your bill. If you'd like a dual billing format, you would receive a separate invoice directly from that supplier, whether it be Constellation or whomever else. You would pay them directly for that, for just the supply cost. You would receive a much smaller bill from PPL, again, only for those delivery charges that I had spoke about earlier. A couple of differences there. Also, this idea of 100% swing, which you see a few suppliers noting on here. 100% swing is kind of the best of both worlds, but suppliers know, they have an idea anyway of what your accounts consume on a monthly as well as the annual basis. They understand that seasonality and many other variety of factors can come into play in the future that might adjust this usage volume or forecasted volume. So what the 100% swing accounts for, and it doesn't get any better than that. Some suppliers will actually only provide 25 or 50% swing, but it's what 100% swing is saying that your load, if it's 1,000 kilowatt hours a year, your load can shift 100% above or 100% below that threshold in which we see for consumption with no change to the price, meaning that we're allotting for some sort of change in your account. We understand that things do change slightly, but don't worry about it. Your price is fixed as we've agreed upon up front here. Moving now to just a little bit further, deeper dive into APPI. It's not just our executive VP and certainly our leadership team and our senior consulting staff helping you as a dealer on this. There's a lot of background support that goes into it too. And really these are differentiating factors between us and any additional outfits out there. Our customer service team is by far and away top-notch. They are here to interact with you as well as myself post-contract with any and all questions that might arise. Hopefully there's no billing concerns or issues. If that were the case, that's why our customer service team is here. We'd like to be the liaison between you and the new supplier relationship that's just been implemented. Again, a seamless supplier transition and transactions is our goal here. We don't want you, unless you'd like to, we don't want you to take time out of your day to deal with these concerns, questions, or issues. That's why we'd like to, again, be the liaison and assist in that regard through PAA and help you get the answers to the questions or identify the solutions needed through our customer service team. Again, they're great, and more than likely what we've, of course, found over the years is our customer service team, we have direct lines or back lines to some of these top-tier suppliers that we work with. So in other words, if you were to take on the project of navigating, let's say, a billing question or a concern, more than likely our customer service team is able to get you a response and get you an answer faster than you might be able to on your own, just because of, again, we work closely with these suppliers rigorously on a day-by-day basis. At least 400 RFPs a month we're sending over to them for price discovery requests. So keep that in mind. These suppliers value our relationship too, and we want to relay that upon them as well, that our customers are tied into the mix too. So again, they treat us rather fairly and they're efficient with their responses, and they'd like to see resolve with this sort of thing as well. Also, and this goes along with customer service, but myself included, we will monitor the markets going forward and alert you as to when attractive opportunities may exist. A lot of people with any sort of annual or biannual renewal opportunity on controlling costs, most think, okay, well, I'll take a look at this when it's a month or two out from expiration. This whole idea of energy commodities is way more sophisticated than that, as you've seen in a few of the slides earlier today. So what that means is that even though we say locked in a solution for your accounts for a 2-year term, our services don't stop there. Not, of course, as I mentioned, customer service is ongoing, but my job, my goal here at APPI is to constantly monitor the markets going forward, knowing your future start date, and alert you as to when attractive opportunities might exist to begin that renewal price discovery process. That might be a year into the 2-year contract. It might be 6 months before the contract is set to expire, but know that we are constantly on the lookout to, again, utilize ERC charts and help you better determine when a good time might be to take a look at some renewal solutions. The beauty, the benefit of this approach is that we're not backing ourselves into a corner. Let's say the market isn't positioned favorably and we only have a month left to renew the agreement. Well, then we don't have much to choose from at that point in time. If we start the process much earlier, whether it be a year out, 6 months out, year and a half out, let's say, we have much time, many days to many months to go back and forth with suppliers, negotiate further if necessary, or perhaps wait for the market to turn around a little bit. So again, just wanted to point that out, that our services aren't just as simple as we call you a month before it expires and we look at renewal solutions there. This is a competitive action and opportunity, and we want to be a part of it in any way, shape, or form for your business. And finally, as Allison mentioned earlier, our Energy Solutions division, which has been around for a little over a year and a half now, but well, for lack of a better term, this is what it boils down to. Many of you are aware of, well, renewable solutions that are coming about. So regardless of how you feel about it, the industry is making a shift. They're making a change away from the fossil fuel generation mix and leaning more, pushing more towards this renewable aspect. So with that in mind, of course, it makes sense for APPI to begin the dialogue, discussing these various solutions that might make sense for dealers across the state of Pennsylvania. What we found, of course, here within the last year or two, there's many different ways to tackle this side of efficiency solutions on the energy side. What we found over the years is that the easiest low-hanging fruit surrounds LED retrofits for the stores. If you've not looked at replacing the bulbs, interior or exterior, to help reduce demand, we would strongly advise you to be taking a look at this now. Many different factors come into play when assessing the various opportunities surrounding LED sustainability or upgrades. But two things to point out. Just like what we've mentioned earlier on the gas and electricity side, APPI is here to give you an unbiased opinion, but also provides you multiple supplier solutions, in this case, multiple vendor solutions. So by utilizing our services, no upfront cost or obligation for a quick walkthrough surrounding an LED upgrade, again, no cost to you. We're employing many different local vendors to take a look at the various solutions and provide an analysis and proposal for you on that front. But also, a large differentiating factor with us is that we're here to assist with any sort of incentives or rebates that are available between you and the local utility companies, PECO, PPL, whomever. They change from time to time, just like the energy markets, so we want to keep you abreast of those changes as well. So again, keep it in mind, if you are looking for any sort of an LED assessment review, we would very much welcome the opportunity to help out in that regard. Do a quick 15-minute walkthrough, get back to you in a week or two with detailed analysis and some cost projections. And furthermore, this is a great point to even mention that we can bundle this into your next power purchase agreement for financing options, if that makes sense to you, or if that seems like the best route. If you're not looking to spend all this money up front for an LED retrofit, we can find ways to finance it through the next procurement contract even let's say that the next power purchase contract doesn't start until January of 2021 or 22, let's say, if you're looking at a solution and financing it through the next power contract, we can get started on the LED retrofit tomorrow. But again, you pay for it here in the next year or two whenever that current agreement is set, or the next agreement is set to start. Also, of course, if you're looking into any sort of battery or artificial intelligence surrounding that, we can help you on that front, as well as solar solutions too. Just actually working with a few dealers outside of Philadelphia and up in the greater Lehigh Valley with stores, neighboring stores over in New Jersey, where there's a great incentive now for solar solutions. So please keep us in mind in that front as well. And also, it's a good point to mention utility expense benchmarking. If you would like us to take a look at any additional operating costs, whether that be your telecommunication bills, waste, water, garbage disposal, anything like that, we're here to give you a billing audit, for lack of a better term, and identify billing errors, questions, or concerns that we can help you recoup savings or costs on too. And again, just a little bit more on APPI. Gosh, we've been active and operational since 1996 in every deregulated market across the country. It's, again, I've said it before, but very much a blessing in disguise to be partnered with PAA and have the state just really in our backyard. We're based in Salisbury, Maryland, just south of you all. And again, it's been wonderful to regionally be that close to Harrisburg, Philadelphia, and Pittsburgh. We're in the area, our team as well as myself and they're on a consistent, weekly if not monthly basis, meeting with, talking with dealers, helping them better navigate the maze of energy, electricity, and natural gas purchasing. Just under 8,000 accounts under contract in Pennsylvania. I believe that right now we have just a little over 300 dealers that currently work with APPI in our solutions platform, our procurement and solutions platform through PAA. And again, just a little over 40 employees now working for APPI in-house and throughout various satellite offices spread throughout the country, Florida, Pennsylvania, Baltimore, and into Pennsylvania as well. That's all that I had for today. I'm sorry it took a couple of extra minutes than what I'd like to, but I did, of course, want to add my contact information along with my cell in there as well, since I'm traveling quite frequently now and in and around the area all the time. Would love to speak with you directly, chat with you individually on your next purchasing strategy. And again, I think this is probably a better time than ever to perhaps open the field up to questions. Allison or Carrie, if there's anyone who has submitted any questions or would like to now, love to help out, love to answer those.
Thank you, Drew and Allison, for joining us. At this point, as Drew said, we do invite participants to ask questions through the webcast system. If you have difficulty sending your question, please email them to dpangborn@apppienergy.com, as you see there on your screen.
Well, as we're waiting for maybe some questions to come in, and I think maybe, Drew, you might have covered this, but if a member is currently in a contract with a utility and it doesn't expire until 2021, are they able to start looking at other options?
Yes, absolutely, Allison. And in fact, we'd encourage you to be doing just that. I was just in the Lehigh Valley last week and down into Philadelphia talking with a few dealers with that specific start date of all things. So no, it's not too early to begin looking at future solutions. And in fact, now more than ever, the forward power strips for customers behind PJM, the Pennsylvania, Jersey, Maryland grid system that I mentioned earlier, PJM forward power prices now are roughly within 5% of all-time lows, particularly for that calendar strip, the calendar strips of 2021 through 2023. So what that means is that, to answer your question, not only is it beneficial to get a head start on this upcoming renewal opportunity in January of 21, but it would be a favorable time, a significantly favorable time, to get the ball rolling on that upcoming purchasing decision now rather than wait any further, just based on what I had mentioned. And if anybody would like to see that forward power price chart, I'm very happy to send it. It's a compelling illustration.
Thank you, Drew. We do have another question for you. Given this new division, Solutions Division, can you explain in a little more detail what an optimal lighting retrofit client may look like?
Sure. What we've found, of course, over the last year or two with analyzing this from a lighting sense, if you've not taken a look at your various lighting fixtures, whether it be halogens or whatever, here in the last, most say 5 to 6 years. We're saying within about, if it's been 10 years, if it's been 8 to 10 years since you've looked at any sort of efficiency upgrades on the lighting side, now's the time to be looking at it. A lot of technology has changed, of course, with LEDs or even solar, or any of these renewables we talk about. A lot has changed here in the past few years, more importantly. So with what we're able to get back from our vendors here is that costs for these various initiatives have dropped tremendously. So again, if it's been about a decade or so since you've looked at a solution on the lighting side, we'd encourage you to take a look now, only because of what you'll be able to find. More vibrant or more illuminating fixtures, as well as the costs had dropped a little bit too. And as I mentioned too, depending upon the parameters of how you like to pay for this efficiency upgrade, we have many different ways of navigating that maze. So again, an ideal customer, if you don't have the money up front, an ideal customer might be looking to employ a power purchasing contract and finance the lighting retrofit through the purchasing contract over the course of a 3 or 4 year term. We're happy to help out in that regard too. So it's not a mandatory that you have to be coming out of a supplier contract, but to answer your question, if you've not looked at it in at least the last 8 or so years, I would say that in our heads triggers, well, it might be worth a quick walkthrough just to see what opportunities may exist on the lighting side.
Great, thank you. It looks like at this time we have no further questions for you. We'd like to thank everyone for participating today. A special thank you to Allison Mitchell for joining us, as well as our presenter, Drew Pangborn. Today's program is copyright 2019 APPI Energy with all rights reserved. This concludes today's program. You may now disconnect. Thank you.
Thank you all.